Welcome back to Conflicts of Interest. This is episode 649. I'm the host of the show, Kyle Anzalone. Have an interview with Mike Maharrey of MoneyMetals.com in the 10th Amendment Center today, talking about geopolitics and the American economy. A very good conversation. I think you all are going to love it. Before we get into it, just want to mention that the show is hosted at the Libertarian Institute. You can find the show on the blog at antiwar.com, and you can follow me on Twitter at @KyleAnzalone_, where I post everything I write, the daily news roundup. I will start posting my newsletter for the Institute there, as well as all the news stories I write and this podcast. Additionally, we have a new sponsor here at Conflicts of Interest, and that is the Expat Money Summit 2024. Of course, this is hosted by the great Mikhail Thorup, and he is the host of the Expat Money Show. I was recently on that show. Really one of my favorite interviews that I have ever done. I really liked Mikhail. Great conversation. So check that out if you want a little bit more insight into him and to hear an interview from myself. This is a must-attend conference because you are going to learn everything that you need to know about crafting a perfect plan B. And after listening to this episode, it might be a good idea to have a good plan B. How to quickly acquire a second passport, diversify your finances offshore, invest in international real estate, and get in-depth insights on geopolitics from world-renowned experts. Speakers at the conference include Dr. Ron Paul, Doug Casey, Scott Horton, Tom Woods, and others. This will be from October 7th to the 11th and is hosted all online. And if you go to expatmoneysummit.com, again, that's expatmoneysummit.com, you can get your free complimentary ticket to the summit. All right, everybody, let's get into the interview with Mike Maharrey. All right, Mike Maharrey is here. Mike, welcome back to the show. How have you been?
Hey, Kyle. It's great to talk to you again. I'm doing pretty good. How about yourself?
Doing well. Happy to have you back here. It's been quite some time. And so I think you're actually in a new spot than you were the last time you were on the show. So why don't you just quickly give the audience, anybody who doesn't know you, who are you? And for those of you who maybe know who you are, what are you up to recently?
Yeah, sure. So I kind of wear two hats. I think a lot of people probably know me as the National Communications Director at the 10th Amendment Center. And I am still doing that, have been doing that for over a decade now. And over at the TAC, it's kind of a quiet time of year for us since most state legislatures are not in session right now. So we're doing a lot of, kind of historical articles and kind of delving back into the even the colonial history and looking at how the colonists faced down what was then the largest and most powerful government in history, similar to where we are today, dealing with our own federal government. And then I'm also a reporter and analyst for Money Metals, which is a precious metals company. We sell physical gold and silver. And I write a lot of articles, really primarily following the Fed monetary policy, kind of what's going on in the economy, since the Fed is really driving that with all of its inflationary policies. And so really, really busy over there because, every day's a new treat when it comes to the Fed and government malfeasance when it comes to our money.
Yeah, and I mean, I appreciate your work so much. I feel like in a way you do on the money side, the financial side, what somebody like Dave DeCamp at antiwar.com does on the foreign policy side, where, just every day there's all this news coming out. And of course, if you don't have somebody like yourself, like Dave DeCamp, really people just have to read the mainstream media, and without hours and hours to invest, it's really hard to find the truth. So really everybody check out Mike's work and kind of keep up with it as you go, because he's just got so much really good information off his articles. And we're going to be talking about some of those on today's show. So I have quite a few of your articles up here from Monetary Metals, Mike. And the first one here is, we are in a recession in full-time jobs. And so I guess, first of all, what does it mean to be in a recession in full-time jobs? Because, again, I kind of sometimes get sucked into just reading the headlines on the monetary issues. And according to the mainstream media, or especially the liberal mainstream media, not only is the economy humming along very nicely, Joe Biden has been the best jobs creator as a president since George Washington. So what's actually happening here?
Yeah, that's that's the danger in trying to parse out anything that's going on in the economy is that the mainstream is so focused on just headline numbers, most of which are generated by the government. And I mean, I hate to be cynical, but there's every reason to believe that the government has a vested interest in making things look better than they are, and that is in fact how it happens. And the mainstream media plays along. And I don't know, is it malfeasance or is it just ignorance and laziness? Folks out there can decide which or what combination that might be. But the fact of the matter is, what you get if you're listening to Fox Business or CNBC or CNN or whatever is a little bit different than what's going on when you look under the surface. So, as you pointed out with jobs, we've heard, over and over again for 2 years, oh, there's all these new jobs every month, 100,000 new jobs, 200,000 new jobs. The first thing that people need to be aware of that almost every month they go back and revise the numbers. So, you hear this headline that the economy added 200 jobs in June, and then in July they'll come back and they'll get rid of 60,000 of those jobs, just boom. And nobody ever reports on that part of it. But even more, you have to kind of look down in the numbers with this kind of stuff, any economic data. And when you look at actual job creation, the vast majority of it is in the realm of part-time jobs. Full-time jobs are actually contracting. That's what I mean by we're in a recession in full-time jobs. We're actually seeing those numbers decline. So even while the economy is adding jobs, we're losing full-time jobs. And what's obviously happening is people they're losing their good job and they're taking on 2, 3 part-time jobs just to make ends meet because we're still dealing with a very inflationary environment, despite what you might hear about inflation cooling off. So, if that's the weird thing about these employment statistics, if you get a job or let's say you already have a job, you're working full time, and then you're like, man, I can't pay the bills with this job. I got to go deliver pizzas. So you get a part-time job delivering pizzas. Well, the BLS, Bureau of Labor and Statistics, they're going to report that as a new added job in the economy. So when you dig in, you can see what's going on. People are struggling to make ends meet in this economy. They're taking on part-time jobs. They're losing their good full-time employment. And here we are. And yet the mainstream is going to make you think, and the Biden administration talking heads, they're going to tell you that, hey, this is great. We're making all these jobs. And really, under the surface, we have a labor market that is kind of eroding and signaling problems ahead.
So just a question here. Let's take, for example, me or you, right? So in 2020, I worked at a school full time. I had one job. Now I'm the opinion editor of antiwar.com, the news editor of the Libertarian Institute, the co-host of Conflicts of Interest, and I do a couple other things on the side. So let's say, I got a buddy who lost his full-time job. So now he drives Uber, Lyft, does TaskRabbit, and will also do some landscaping gigs on the side. So how are those jobs? Like, how many jobs do I currently have by the metrics? Is it 4? Is it 1? How does that work?
I think you have 4. I mean, and that's the crazy thing. But, again, I'm working full time right now, but let's say something happens and, Money Metal says, Mike, we don't need your articles anymore. So I go out and I start driving for Uber and I start delivering pizzas. And then I go to my local grocery store and stock at night. As far as the Bureau of Labor Statistics goes, that's 3 jobs. So now instead of having 1 job, I have 3 jobs. So according to the statistics, the economy has added 2 jobs. And that's kind of how it works. So yeah, you really have to dig into those numbers and look, are these full-time jobs? Are they part-time jobs? What sectors are gaining employment? If you look, the important sectors like manufacturing are shedding jobs. Where we're adding a lot of these jobs is in government jobs. Well, that's not helping the economy, right? That's the government sucking money out of my pocket and handing it to somebody else to do something I probably don't want it to do in the first place. Probably sending it off to make a war somewhere, to be honest. So, yeah, the statistics can be very misleading. So it's very important to look deeper into the numbers.
And when it comes to the government jobs, do we get much of a breakdown on where those jobs are? Are these just Department of Defense contractors that are added? Are these the 80,000 or whatever IRS agents that are added? Or are we talking about, they're hiring bus drivers and cafeteria lunch ladies, which there's a different amount. I would much rather have a bus driver than a IRS agent, right?
Right. The statistics aggregate all of that.
Okay.
So it would be state, local, and federal jobs. So everything from your 80,000 IRS agents to, your state bureaucrat working at the DMV, to the lunch lady would all be considered government jobs at one level or another. A military contractor, I think that would actually be considered a private sector job. In terms of the statistics, but of course you and I both know that it's nothing private about it. It's basically an extension of the Pentagon.
Right, I guess because the Pentagon would be paying whatever company, Raytheon, whoever, and then
Right.
they pay the employee, so that it would be
Right.
counted as private sector, even though that seems like a bit of a stretch to call it private sector. So you have another article here. Take this great CPI news with a grain of salt. You just told us that the jobs numbers aren't as good as they say, but the inflation numbers. See, this one is the one where nobody believes the actual numbers. All my friends I talk to, they all go to the grocery store, Mike, so they all
Right.
know when the government says inflation is down and the grocery bill is up another $20 this month, that something is wrong there. But can you get into a little bit of what's actually wrong here?
Yeah, there's a couple of things that are really important to keep in mind when you are looking at consumer price index, which is what CPI stands for. And basically what it is, it's a government statistic. They take a quote unquote basket of goods and they decide what's in the basket and what percentage weight each part of that basket gets. So it's everything from automobiles to food to medical care. All this stuff is thrown together and they run it through a statistical blender and they come out with CPI figures. So just knowing that, be suspect, okay? Because again, the government has a vested interest in making things look better than it is. And another thing that's important to keep in mind is that when you hear that, oh, CPI only was up 3% this month, and that's down, it's cooler. Prices are still going up at 3%, right? When they say inflation is cooling, that does not mean prices are going down. It means they're going up a little bit more slowly than they were before. And so by that metric, yes, if you just take the raw numbers and look at the CPI, you're going to think, yeah, inflation is better. And the biggest problem here is that we live in a world now that conflates two definitions that really should be separate and distinct. When you hear somebody on the news or a White House spokesperson talk about inflation, they almost always mean rising prices. So, if oil prices go up, they're going to say that's inflation. But historically, when the term inflation was used, economists meant an increase in the money supply and the level of credit. So when you print money, when you expand the money supply, that used to be what people meant when they said inflation. Rising prices, price inflation, is a symptom of monetary inflation. So you can kind of see what they've done. By calling just rising prices inflation, they can make all kinds of excuses about why this is happening. And that's exactly what they do. They say, oh, it's greedy corporations, or, Putin's price hikes, or we have an oil shortage, so now we have inflation. That's not really what's going on. The only thing that causes all prices in the economy to rise is monetary inflation, money creation. So, what happens pretty clear. Go back to the pandemic. The Federal Reserve created nearly $5 trillion out of thin air and injected it into the economy within about a 2-year period. And then all of a sudden we got rising prices. That is actually the root cause of the price inflation that we're seeing today. So really what I'm kind of getting at with this article about take it with a grain of salt, while the rate of price increases may be moderating and it may be getting closer to the mythical Federal Reserve 2% target, which is stupid to begin with. Think about this for a second. The stated policy is to make sure that prices rise every year by 2%. So every 5 years, your prices go up 10%. That's what they mean when they say we have no inflation, which is absurd to begin with. But we are getting closer to that. But what we're seeing now is the Fed is about to pivot back to looser monetary policy, meaning they're going to begin incentivizing more borrowing, probably start creating more money out of thin air, we're already seeing the money supply start to increase again as it has been going down for a while. This means that what they're really doing is they're going to create more inflation. So when they say this is a victory over inflation and now we can cut interest rates, we can go back to easy monetary policy, what they're really doing is they're surrendering to inflation. They're waving the white flag and they're saying, hey, we're going to go back to the policies that got us here in the first place. So even if you see CPI dropping a little bit, don't get all excited, because all this means is that the government now has plausible cover to go back to doing what it loves to do, and that's creating money out of thin air. Because here's the dirty little secret. The U.S. government could not borrow and spend the way that it does if we had sound money, if it was backed by gold or silver, if the Fed and the government weren't able to just basically manufacture money and throw it up in the air. If they could not do this, the federal government would not be able to borrow and spend like it does. So if you don't like the welfare state, and if you don't like the welfare state, the root of that problem is the Federal Reserve, because its monetary policy makes that possible. It's exactly why Franklin D. Roosevelt started moving away from the gold standard back in the 1930s, and it's exactly why President Nixon severed the last tie in 1971. They want to be able to create fiat money at their leisure so they can spend money for their wars and for the welfare state. And that's where we are today. So as long as that's all in place, you're going to keep having price inflation. You're going to keep having the situation that you're dealing with to some degree or another. And I'm afraid that when we have the next, economic downturn, which I think is in the near future, when that happens, they're going to have to double down again, just like they did during the pandemic. And, at some point, they're going to lose control of this card game, and it's going to go nuclear, and we're going to see extremely high, even the possibility of hyperinflation down the road if things fell together the right way.
Okay, so this is like a perfect place of where I want to actually take us, because I think you're describing the, potential risk of having really bad price inflation. But from when I've been even aware that there was an economy at like around 10 years old or so up until now, the government has been printing a massive amount of money. During the Bush administration was for the terror wars and all of his big government spending programs. There's he had spent, I think, Medicare and Medicaid quite significantly, prescription drugs, all of that. Of course, Obama was a big spender. And then when we get to Trump, we of course had the pandemic era spending. And for the Obama administration, I was a libertarian, and I was listening to libertarians warning about not just inflation of the money supply, but also price inflation, which I guess comparing the, what's happened since the pandemic to the Obama years, that inflation, if there was a little bit, was absolutely nothing compared to what we're experiencing now. So do you have any idea as to why it seems like this recent inflation has hit the, average person at least so much harder than previous government spending?
Yeah, absolutely. First off, I want to make a point about the Trump administration. There's kind of a little bit of wool pulled over some folks' eyes who are Trump supporters, in that, the only reason that he spent all that money was the pandemic. And that's not true. You go back to 2019, the year prior to the pandemic, that fiscal year, we were on our way to a $1 trillion budget deficit, even without the pandemic starting yet. We were on that trajectory. And the only time we've ever had $1 trillion budget deficits in a year before that was during the Obama years. And he at least had the excuse, I don't think it's a good one, but he at least had the excuse of, we're in the worst depression since the Great Depression, right? And he could say, we have to spend this money to stimulate. And of course, when you have a recession, tax revenues were down. Trump was doing this when supposedly we had the greatest economy in the history of the world. So, the idea that Trump was some kind of fiscal policy hawk is a myth. And then, of course, it just blew all the, what, when we got to the pandemic. But yeah, that's a really good question, because we didn't see the consumer price inflation in the wake of the 2008 financial crisis and all the quantitative easing and money printing they did then, like we did after the pandemic. And I think there's a couple of reasons for it. The first thing to understand is that when you have an increase in the money supply, price inflation for consumers is just one of the many symptoms. You also get asset inflation. So asset bubbles, the stock market, housing prices. So going up to the 2008 financial crisis, all of the money they created in the wake of the dot-com bubble because of the policies that were in place at the time, a lot of that went into housing. So it blew up this giant housing bubble. After the Great Recession, we saw another huge increase in the stock market as all of this money printing was going on. So the inflation went into asset prices after the big first round of money printing after the Great Recession. Part of that was due to banking regulations and banking policies that encouraged banks to hold cash in their system as opposed to loaning it out. So there wasn't quite as much credit expansion. There was plenty, but that's some of the reason we didn't see it leak into the consumer prices. The pandemic was a completely different scenario. First off, they did more money creation in the 2 pandemic years than they did in the entire decade after the 2008 financial crisis. So it was a massive, unprecedented amount of money creation all at one time. The second thing is as the government was creating money, or the Fed was creating this money, the government was handing out stimulus checks. Meanwhile, nobody was working. So it's the perfect storm. You've got all of this new money coming into the system. So you've got more money chasing the same amount of goods. Then you've got the government shutting down the economy, so nobody's producing anything. So now you actually have more money chasing fewer goods. Economics 101 tells you that you're going to end up with rising consumer prices in that scenario. And then, of course, the government handed out checks, which gave people money to spend, even though they weren't producing. So you had both sides of that price inflation equation in play during the pandemic. A increase in money, a decrease in goods and services, and people with money still in their pocket able to go out and spend it and bid prices up. And, it's funny because in, like 2022, you had the Fed officials and government officials. I don't understand why we're getting this inflation. How could this be? It must be Putin, I was saying in the beginning of the pandemic, they're going to create a bunch of price inflation. I'm not like brilliant, I'm not a PhD economist or anything, but anybody with a basic economic understanding knew this was going to happen. And then they tried to lie about it, basically, which is what they do. They tried to blame it on everything else in the world, because the last thing Jerome Powell, the Fed chair, or Joe Biden, or any of these people want to do is look in the mirror and say, oh, we did this, because that's what happened. But then people stop voting for them. So that's kind of where we are today. And I think that we've kind of hit this critical mass where the economy depends on inflation. It depends on artificially low interest rates. It depends on money printing. The borrowing depends on money printing. And so, it's kind of ratcheted up, use Robert Higgs's old ratchet effect. And we're getting to the point that, in 2008, they did some pretty extreme monetary policy. During the pandemic, they did extremely extreme monetary policy. I guess next we go to extremely, extremely extreme. So it's just going to get worse and worse until the whole house of cards falls down.
Yeah. I was talking to somebody pretty recently, and they were, saying how previously a lot of the government money that was printed was kind of, as you mentioned, because of credit and banking policies, it would be siloed into a particular sector of the economy. And so you may pay $100,000 more for a house than you would have 5 years ago. But when you go to the grocery store to buy milk, it costs the same thing throughout those 5 years, where now every time you go to buy, milk, or tea beds is one for me. The price of my tea beds have doubled over the past, I think, 2 years, from $3 to $6, which, if you drink as much tea as I do, that's a pretty meaningful difference. And so I feel like for the first time, maybe people are really feeling the true tats of inflation, where before nobody called it inflation, even though you were like people my generation. A lot of my friends are completely priced out of the housing market. They have utterly given up on buying a house. Some of them, I talked to them, they're basically waiting for their parents to retire or die, and then they're going to get their parents' house, because they know they're never going to get a house in an area they want that's close to a job that is what they need. And so that's another big difference. Now, I want just one more question on the CPI, because it seems to me if gas prices go up like 5 to 10%, especially somebody in my position where I don't have to drive every day, I'm going to drive far less. And then that's going to reduce demand. And then that might bring down the gas price a little bit. And so does CPI factor any of that in? The fact that like inflation is causing a decrease in demand. And so that might be a part of the reason why the CPI is going down. Or are they just, celebrating essentially the fact that inflation lowers demand as a victory for the inflation numbers?
Yeah, it's definitely the latter. So,
Okay.
and you make a really good point. And that's part of the reason they have, we have CPI and then they have what they call core CPI, which factors out more volatile food and energy prices. And I always say, I wish I could factor them out of my budget, but regardless of that fact, as I said, there are a lot of things that can cause prices to go up. And let's just take oil for one example. You could have a pipeline shutdown that would decrease the supply, would raise the price. You could have a war, which again disrupts the flow of oil and disrupts supply, and then it might raise the price. Or you could have a situation where the president goes out and sells a bunch of the strategic reserve on the open market, flooding the market with new oil, which would lower the price. None of that's inflation. Right. Again, inflation is as properly defined is caused by monetary policy. And exactly what you say happens when other factors are raising prices. So again, if oil prices go way up, gasoline goes up, you're going to drive less, you're not going to take a vacation, you may not fly, you're going to cut other areas in order to make up for that. So let's say food prices go way up. Let's say there's a meat shortage for some reason, and the cost of meat goes way up, and people have to spend more money at the grocery store. That's not inflation. That's just a price shock. And so people will adjust and they'll buy less of something else in order to compensate for the food. When you have price inflation that is caused by monetary policy, all the prices go up at the same time at a uniform rate. So you might have oil prices going up, 40% because of a price shock, but 60% because of price inflation underlying that. So it's really hard to disambiguate what is causing prices to rise in a given sector and what's causing overall prices to rise. But that's why you have to always go back to sound economic theory. And you have to understand that when you have an increase in the money supply, you are going to get an inflationary effect in asset markets and in regular prices. Even if it's not as much as we had recently, you don't notice you're still having it. It's still bubbling under the surface. The government is constantly stealing your purchasing power and stealing your wealth. And then they'll tell you, oh, but your wages are going up along with it. And that's true. Wages also go up in an inflationary environment, but they never go up as fast as prices. The people who really get the advantage in an inflationary environment are bankers, investors, high-end investors like, mutual funds and whatnot, and the government. Those are the people that benefit. The people that get hosed are your average wage earner, your retiree, people that are depending on their money, and it's being completely devalued by these government policies. So it's really pernicious. If you want to look at the reason people, complain about the growing disparity between the rich and the poor, well, that's because the top 1% are taking advantage of this inflationary environment because they have the means and the connections to do so, and the rest of us are getting left in the dust.
Yeah, and sometimes I wish the U.S. government had people that really understood economic policy because I think it would make the lives of Americans better. Although it also scares me because, as you said, there's this like basic concept of supply and demand. And say if a war or sanctions policy were to take oil off of the market, well, that seems to me would obviously lead to increase in the price of oil. So say if you have Russia, Venezuela, and Iran, all three major oil producers, well, if you wanted to like hurt Russia's ability to export oil and cause, them it to hurt their economy, well, if you allow Iran and Venezuela to flood the market with oil, that's going to work. But if you try to sanction all three countries, well, then Russia is actually the only one that's actually capable of evading the sanctions. And so it actually benefits Russia to have Iran and Venezuela sanctioned. And so I always like to point that out when I'm talking about sanctions, how the US government doesn't seem to understand supply and demand. And then I almost instantly regret it because I'm like, what if somebody sees this? And then they're like, we finally figured out how to make these sanctions on Russia work. That would be bad news.
Well, the problem is that government people, even if they understand, they're making policy decisions based on political considerations, not market considerations. And so you're always going to have a bias, and you're going to have a slant in the economy towards those things because that's what the government does. So again, you can debate whether it's malfeasance or ignorance or a combination of both. But the bottom line is when you allow the government to interfere in the economy, whether it's through monetary policy or sanctions or regulations or whatever it is, you're always going to have these kind of unseen consequences that the average person doesn't realize, and the government's going to point at somebody else to pin the blame. And so, again, we're left holding the bag. So this is why I'm an advocate of free markets. They're not perfect markets, that they have problems, they get distorted at times, but they generally self-correct pretty well. Governments, on the other hand, you're never going to change government incentives. So until we allow markets to work, we're always going to have to deal with these kinds of things that are, again, robbing us of our wealth, and it's really nefarious.
All right, so to wrap up here, this is, I think, one of my favorite articles that I read of yours recently, putting the national debt into perspective that we can all understand, because $35 trillion seems fake. I guess
right.
you can't even imagine
monopoly
it.
money, right?
Right. Is that, well, even then, it's hard to imagine $35 trillion
right.
in monopoly money. Is that the size of my house? Is that the size of a shipping container? Just how much money are we talking about here? And who actually owes this $35 trillion?
Well, I mean, some people will say, well, nobody owes it. And then you get the modern monetary theory people who try to pretend like that. They'll actually say that the national debt is national savings because they do these weird accounting things, which I have an accounting degree, so I understand what they're doing. It works on paper, but it's not working in reality. The money is owed by the federal government, which is an entity, and it is owed to everybody who's ever bought a treasury bond. And that goes from, American investors, bankers, pension plans, to a big chunk of it is owned by foreign investors. So, China holds billions of dollars of U.S. Treasury debt. Japan holds billions of dollars of U.S. Treasury debt. So we owe that money to all of them. So maybe a real quick explanation of how government is funded might be useful here for folks. Because it is kind of, it's one of those kind of weird things. Like, I don't really want to talk about this or think about this because it's complicated and who cares, but it's important to know. So basically what happens is that the government runs a deficit. That means it has spent more money than it has, or more money than it's bringing in. So it has to borrow money. And it does that by selling treasury bonds. Treasury bonds can have lengths to go from months all the way out to 30 years. And so they go out on the open market and they sell these bonds, and people buy them, investors all over the world, they buy them. And then the U.S. government pays a percentage of interest, which is based on, it's very connected to the Fed interest rate. And as that bond matures, then the government has to give the person who bought the bond money back, however much money it is. So if it's a $100 bond, in 10 years, then the holder gets that bond $100 back, and then plus whatever interest. So that's how it works. It's just like taking out a loan for a car or for anything else. So when you say it's not owed to anybody, well, that's absurd. It's like saying I borrowed money from the bank for the car, but I don't owe it to anybody. It doesn't make any sense whatsoever. So the problem is that we're in so much debt, the deficits are so big, is that when those bonds mature, there's no money to pay the bondholder back. So they have to borrow money in order to pay the guy who's holding this mature bond. So basically what they're doing is they're, borrowing to pay off borrowing, which is kind of like a Ponzi scheme. Just going to throw that out there. So yeah, that's where we are. So people want to say the debt doesn't matter. Of course it matters. We're paying $1 trillion this year just on interest on the debt. That's about a third of the tax revenue that comes into the federal government. They're spending more money month to month on interest expense right now than they are on national defense. So all that money has to go somewhere, and it has to come from somewhere. And it's a big problem. And it's the kind of problem where you can kick the can down the road. And I'm very fond of saying that that's all well and good until you run out of road. And, I don't know if it's 36 trillion or 40 trillion or 80 trillion, but there is an end to the road where it no longer becomes sustainable, because people are going to say, I don't want these worthless bonds. I don't trust that I'm going to ever get this money back. And when the world loses faith in America's ability to actually make good on this debt is when you're going to see a massive catastrophe with the dollar, where you could see the dollar lose its role as a reserve currency, where people won't want dollars anymore. And when that happens, you talk about inflation. You've got all these dollars floating around in the world that nobody wants. That's not going to be good for folks here at home.
This is, one of the reasons why the geopolitics of all this concerns me so much, because it really seems like the U.S. government is almost dedicated to make the dollar no longer the world reserve currency. We have sanctions on well over a dozen countries, including essentially crippling sanctions on about 6 to 10 at this point. And all of those countries have started to, set up their own economies and they could trade. And we're talking about literally billions of people here now. And so that's a pretty good sized world economy that you could have, excluding the United States. And as the US isolates itself more and more, even countries that are NATO allies, such as Turkey, would rather do business with Russia, China, India, Venezuela, Iran, Syria, Zimbabwe, Nicaragua, North Korea, than they would having access to the Americans in the Eurozone. And I'm sure that has some reflection on what's happened to our economy, particularly in manufacturing, and what we actually are able to make in the quality of our products today. But also it reflects on the geopolitics and the American leadership and how we've really created this alternative world economy that in one sense, there's a lot of panic over losing the American dollar status as a world reserve currency, but it seems like everything our elected leaders do accelerates the process of getting there. So I guess just to wrap up here, you would say it's more of a situational geopolitical situation than a particular dollar amount that will eventually knock the dollar off its standing as the pedestal, right? It's not like you're worried about, $50 million is a number. If we could just slow down and stay in the 40s, we'll be okay. It's more going to be just the change of American leadership, and maybe countries a little less worried about the American military or something like that.
Yeah, exactly. It is definitely a geopolitical issue as much as an economic issue. And I think what you're really kind of framing here is arrogance. It's the arrogance of empire. It's, the dollar will always be the reserve currency, whatever we do. So there's this mentality that, we're so powerful and we're so far on top of the mountain that there's no way we can ever be knocked off again. And, history teaches us that every empire eventually collapses. And oftentimes it is these internal economic things combined with pressure from outside that do that. And America was given a great privilege in having the reserve currency, and the United States has abused that privilege. It's abused it by reckless fiscal policy at home, and it's abused it by reckless foreign policy overseas. Using the dollar as a weapon is a horrible, horrible long-run strategy. It might, people might say, well, we've got to punish Russia, or we've got to punish Iran, or whatever. But set that aside and look at the precedent that you're setting, and realize that other countries are watching, and they're saying, hey, if we're holding a bunch of dollars and we do something that America doesn't like, well, they could take our dollars from us. If you have something and it's very risky to have and it could be taken away, what are you going to do? Well, you're going to find something that's safer. And that's exactly what a lot of countries are doing right now. You hit the nail on the head. They're looking at ways of doing trade in their own currencies. We're seeing a big increase of central bank gold buying, particularly in emerging market countries, China, Russia, India. These BRICS nations, they're accumulating gold because gold is real money. And if the dollar does fall off its pedestal, well, they'll have some real money in reserve. So I think this is kind of the real big thing that folks should be watching. And I'm kind of the opinion that it's going to be a slow erosion. It's one of those things that happens slowly and then all at once. I don't think that we're going to wake up tomorrow and all of a sudden the dollar is going to fall off its pedestal and we're going to have a currency crisis. But I think slowly we're going to continue to see the erosion of dollar dominance over time. And then we will hit that tipping point. And I agree with you that it will be more likely some type of geopolitical event where all of a sudden people are like, we're not holding dollars at all anymore. And again, China holds billions of dollars in U.S. treasuries. If they were to start dumping all of those on the market, it would significantly impact the dollar status in the world. There's risk for China to do that as well for their economy. But, you get in a war situation, nuclear options become acceptable. And if that happens, then it's not going to be good for the United States. And again, we're going to be the ones that suffer because what we're talking about in a currency crisis is a rapid devaluation of the dollar, which is another way of saying rampant price inflation and even hyperinflation. So I think people should pay very close attention to the geopolitics of money and the economy because that's really where the kind of the action is.
Well, and you could do that by reading pretty much everything Mike writes over at Monetary Metals. The page there is absolutely fantastic. What?
Money Metals.
Money Metals.
There's two companies and it confuses people. There's Monetary Metals and there's Money Metals. So we're Money Metals Exchange at moneymetals.com.
Thank you. And then do all of your other plugs right now before I get any of them wrong.
Oh, absolutely. 10th Amendment Center, go to 10thamendmentcenter.com. 10th is all spelled out. And keep up with what we're doing over there. As people that are familiar with us know, we're looking for ways to really take on overreaching federal power by using state and local authority to kind of back the feds down. We're really looking forward to another round of pushing for the Defend the Guard bill, which a lot of folks listening, I'm sure, will be interested in. This is a bill that would prohibit governors from allowing their National Guard troops to be deployed into combat situations overseas without a declaration of war. So that's a big policy area that we're going to be working when we get back into things at the end of the year and moving into 2025. So keep up with what we're doing there. And again, you can go to moneymetals.com/news and just go quickly to all of the articles that are there that I'm writing. And you can also check out my podcast, which is called the Midweek Memo. And that's also over on the Money Metals page. And then you can follow me on Twitter, Maharrey 10th. And I'm on Facebook, but nobody can find anything on Facebook anymore, so I don't even bother.
All right. Well, Money Metals, Mike Maharrey, thank you so much for coming on the show today. And everybody, do keep an eye on the Defend the Guard stuff. I was talking to Hunter DeRensis recently and also Derek Prue. Derek does the state coordination up in New Hampshire, and they are very excited. I think 2025 could be a really big year for Defend the Guard.
I think we're getting close to a state passing it. I really do. And we've been doing this for 3 or 4 years now, and every year the momentum grows. We had 3 full chambers pass the bill this last year, including New Hampshire, Arizona, and I can't remember the other one, Montana or Idaho, maybe one of those states out west. So yeah, we're seeing that momentum build, and it's just a matter of time before these lawmakers get the courage to do it. And I think once one state does it, I think you'll see a number of states follow suit. So we're excited about it.
All right. Well, I'm excited too. Thank you so much, and we'll have to do it again soon.